And this morning we're going to talk primarily about ordinary home sales. So this isn't like anything special. These aren't commercial properties. I'm pretty much talking to you just about buyers and sellers of homes. And I want to tell you also that I'm a floodplain manager. I'm not a lawyer or an insurance agent. So if you ask me questions that I don't know the answer to, I will probably most likely refer you to someone who is the appropriate person to answer that. But most of what we're going to talk about today, I do know quite a bit about. So let's get going here. Let's see. All right. So this slide has a few things on it that are reminders about flood risk in general. And these are FEMA facts. In Massachusetts, we have a little bit different numbers than FEMA. But to start out with, just so that you know, if someone lives in an area with low or moderate flood risk, now the low to moderate flood risk is if you're familiar with the FEMA maps, the blue area on the map called the special flood hazard area or the 1% chance flood, or some people still call it the 100-year flood, even though that kind of flood happens more like 60 or 70 years now, not every 100 years. But anyway, if your structure is located in one of those flood hazard areas, you have a 3 times greater chance of having a flood in the home than you do of having a fire during the 30 years of a typical mortgage. That's a FEMA fact. Another FEMA fact is that just 1 inch of water in a home can cost more than $25,000 in damage repair, and that's because the 1 inch of water can ruin floors. Also can destroy some of your electrical components and other things that are under or near the floors. And so flood damage repair can be really costly, even if the flooding appears to be minimal. And then FEMA says that more than 30% of flood claims, and these are claims to the National Flood Insurance Program's policies, flood insurance policies, FEMA says more than 30% of those claims come from areas outside of the special flood hazard area, the blue area on the map. But I want to say that in Massachusetts and in many areas across the country, it's much higher than 30%. For example, in Houston, when the Hurricane Harvey came through Houston in 2017, there were 70% of the claims for flood were outside of the FEMA mapped flood area. And we had a storm in Boston, in the Boston metro area in 2010. And more than 90% of the flood claims, of all kinds of flood claims, not just NFIP, were from outside the FEMA flood area. All of which really points to the fact that FEMA's maps are extremely conservative. And also they need to be updated with future conditions, such as the big rainstorms that we have now all of a sudden. And also they have the maps do not reflect any rainwater that's called urban stormwater flooding. So any pluvial flooding that results in urban stormwater flooding, those are not shown on the FEMA map at all. So if you have a seller or a buyer for a property that's located in the blue section of the FEMA map, that really should be called a high-risk area because of the fact that it floods so much more broadly and deeply than that. And I've listened to realtors over the years because my first question was, why would anybody even buy a property in the floodplain? And you all have told me so many reasons: the beauty, the view, they want to live near the beach, etc. But truly, another one of the main reasons that people buy properties in the floodplain is they're cheaper because A, they've experienced flood damage. B, somebody wants to get out of the floodplain due to the flooding that has happened. And C, because nobody else wants to get a property like that when it's been flooded. And even some of the most beautiful properties have been flooded. So, you know, it's just, I think a really good, if I were a realtor, one of the things I would want to do is make sure that my seller is transparent on the flooding that might have taken place on the property, and that my buyers have all the information they need. They're still going to buy that house in the floodplain, probably anyway. So your first line of defense against all of those costly flood repairs for a seller or a buyer is the flood insurance policy. So just want to share a few more facts about that. One is that homeowner policies that cover theft and fire almost never cover flooding. And you probably all know that. There could be a very rare exception here or there, a special rider, a special Lloyd's of London policy, or maybe an old manufactured home policy, but 99.9% of all homeowner policies do not cover flood. They might cover the flooding if your water heater breaks, or if your dishwasher breaks down and you get flooding in the kitchen, but they don't cover flooding that rises up from outside and comes into a house or on a property. So you want to make sure that if you're selling or helping someone buy a structure in the FEMA floodplain, that they know that about flooding, and that they would get some kind of flood insurance policy. Also, some people, you may have heard that, well, if there's a flood, then FEMA will pay for the repairs to the structure. That's 99% not true, because number one, the flood event would have to be a federally declared disaster before FEMA would even have anything to do with it. And much of the flooding that happens these days, especially stormwater, pluvial flooding, does not get a federal declaration. And so people are on their own to deal with that. Secondly, even if it is a federal declaration and someone doesn't have flood insurance, FEMA is going to request that they apply to the Small Business Administration for a loan before FEMA will give them any kind of a grant. So they might find themselves faced with the fact that they're not going to get any free money anyway, even if it is a federal declaration. And finally, if it is a federal declaration and they didn't have flood insurance, the payout for that is an average of about $6,000 to $10,000 per disaster declaration. So in other words, if someone has flooding, they didn't have a flood policy, it is a federally declared disaster, and they don't qualify for an SBA loan, then they might get $6,000 to $10,000 from FEMA. And if you know much about flooding, that's not going to cover much. That will not make them whole again. So again, we always want to press the point that a flood insurance policy, whether it's required by the lender or not, is a really good idea if the structure is in the blue area. And by the way, anyone who has a mortgage in a floodplain, a FEMA floodplain, has to have a flood insurance policy in the first place. So those cash buyers that you love and that you have don't have to buy a flood insurance policy if they have no mortgage, but they should anyway. And just so you know, people can get a flood insurance policy in Massachusetts in every single community except for 10 communities. There are only 10 communities that don't participate. And actually, you're on Cape Cod, so I can tell you the only one in your area that does not participate is Chilmark. So in Chilmark, someone cannot buy a federal flood insurance policy. They'd have to get a private policy in Chilmark. All right. And so as you all know, because you taught me this when I first came back to Massachusetts, is that Massachusetts is a caveat emptor, or a buyer beware state. So that means there's not a whole lot that the seller is legally required to disclose when selling the property. Obviously, lead paint and septic system information has to be disclosed. So the burden is really on the buyer to ask the right questions, perform a home inspection, etc., in order to determine the property's physical condition, features, and noticeable past damages from flooding. I think, this is just my perspective, but I think that a realtor's reputation can be based in part on helping a buyer to get as much information as possible when you're helping them to buy something in the FEMA special flood hazard area. So for example, one thing you could do and should, and maybe many of you already do this, is use the FEMA maps to look up the flood location of a structure before you take it on or before you share it with someone to buy, to make sure, is it in the floodplain or not? Will they be required to have a policy if they have a mortgage, etc.? And our office gets calls and emails weekly from people asking those same questions. So again, we have another class that shows you how to use the maps. If we have a few minutes left at the end of this course, I can show you how to use the FEMA maps. But if you haven't done it before, or if you need help, or if you're just kind of in a hurry, and you want to just ask if it's in the floodplain or not, we're very happy to help with that. But I will, let's see, I will put in the chat. Let's see, I'm going to see if I can put in the chat anyway. I have to move this over. Let's see. Here we go. I'm going to put the FEMA, whoops. Apparently, I cannot put that in there from this. Let me just see real quick. I want to give you the web address for. All right, hang on. Here we go. Apologies. Okay. So that's the web address for the FEMA Map Service Center. If you're not familiar with it, go in there, fool around. You can't break it. Now let me find out where I am here. Sorry. Does anybody have any questions at this point? Okay. All right. So we know, you know, that flood hazard disclosure in Massachusetts for an ordinary home sale is super light, if you could even say it exists at all. And many agents request the completion of the Massachusetts disclosure form. On that disclosure form, there are some questions about flooding, very light questions that a seller could provide some information on. But it all rests on obviously what the seller is aware of. I mean, obviously, if a seller's only had a house for 4 or 5 years and they don't know anything about whether it flooded before or not, they can't really share anything if they don't have the information. But I think most sellers will tell you, the realtor at least, what they know about what has happened. If a disclosure form is checked as completed and signed, then the buyer could have some legal ground if it's later discovered that known information wasn't disclosed. But that's, you know, now you're going to get into a legal case, and that's, again, beyond my ken. So one real estate firm that I used to know and was in contact with in Massachusetts a few years back required that if a seller refused to complete the disclosure form, then she had to sign a refusal statement for the realtor's file. So if you're not already doing that, that's something you could do too, to help protect yourself anyway, that you gave them the form and they didn't want to sign it or tell. Then you could just say, well, so we gave them the form. But anyway, I guess what all of this to say that flood hazard in Massachusetts is not required to be shared. There are some folks, just so you know, there are some folks in leadership in Massachusetts up near the governor who are working on that, on flood disclosure. So, you know, it could be that in the near future it will be required, but for now it's not. So how can we find out about flood risk? How can a seller find out about the flood risk that they may have and not know about? And how can the buyer find out about flood risk? So these are the things we're going to talk about in the next few minutes. We're going to talk about the FEMA maps a little bit, talk about a form called an elevation certificate. We already talked about seller disclosure. And we're going to talk about existing insurance policies, what you might know or find out from those. And then also a little bit about flood loss history. So for a buyer, what home that they would definitely want to have a home inspection for something in the floodplain, and then other places where there might be some other information about possible flooding. All right, so I'm showing you this just so if you're not familiar with what the FEMA maps look like, this is a typical FEMA flood map. It's actually a section of Boston. And as I mentioned before, the blue is the 100-year flood. We are trying not to use that term anymore. We're trying to use the appropriate scientific term, which is 1% chance flood. And what that means is that there's a 1% chance in any given year that floodwaters would rise as high as those blue areas indicate. So that floodwaters, in this case in Boston Harbor, would rise and reach those sections of the city that are shown in blue. Now it sounds like a 1% chance isn't really very much. And 1% in any given year isn't very much, except that as soon as that year ends, there goes another 1% chance. And as it happens, these floods not only happen about every 60 to 70 years, but also larger floods happen in Massachusetts now. The 250-year flood, the 500-year flood, the 1,000-year flood. I don't know if some of you remember 2023. Of course, you're all on the Cape, but Western, Central and Western Mass and Northeastern Mass had some pretty severe flood events in 2023, 5 severe flood events in 2023. Most of the flood damages from those events were not even in the FEMA floodplain, except for some agricultural damage that happened over in Western Mass with some of the rivers flowing into the Connecticut River Valley. So flooding, I guess what I'm trying to say is flooding happens more often now and more intensely now. So again, the blue areas on the FEMA maps are considered to be very conservative. Let's see, what else am I supposed to tell you about this map? So this map is called a fermet. At the top, you can see the word fermet. And this map is an official clipping from the big FEMA firm, flood insurance rate map. And this is an official map. This is the piece of map that when there's a lender involved in the transaction, the lender pays a third-party determination company. And that third-party determination company looks at the FEMA map, makes a clip like this. You can see in this particular one, there's a little red dot right in the middle. That was the address. That marks the address of the building that I put in to get this map. And this is what the third-party determination company gives to the lender and says, yep, part of that building or the whole building is in the FEMA flood area, and you have to require a flood insurance policy at the time of the closing. So let's see if I'm missing anything else I wanted to tell you about this map. So yeah, the bland fact in front of us is that this kind of a map is the very first piece of information that a buyer would want to see to know whether or not their structure is in whole or in part in the special flood hazard area. And so, you know, again, as a realtor doing a fantastic job with a great reputation, you might want to pull a map like this, a piece of map like this, and have it ready for any buyers that are buying something in the special flood hazard area, just so they know what they're getting into. Some of my notes here are for Central and Western Mass, so I don't really want to waste your time with those. We do have another map that we can use that Massachusetts GIS team puts out, but that's only in the case where the FEMA maps aren't fully available, and for the Cape and Islands, they are fully available. So we'll go ahead and move on to the elevation certificate. Any questions so far? Oh, I see. Peter Franklin says, please explain what the elevation number means. All right, let me go back. Okay. So you see in the blue area where it says zone AE, and underneath that says EL 10 feet. And if you look over in the dark blue area in the north eastern corner of this image, you see zone VE, EL 11 feet. So EL stands for elevation, and that is the base flood elevation. The base flood is what's shown here in blue. That's the extent of the base flood. The depth of the base flood is something else. What that means is that the top of the base flood is expected to be about 11 feet above mean sea level during that flood event. So the building in the middle with the red dot, I don't know the actual height of the first floor of that building. It's a building I used to work in Boston. It has a basement, and I can tell you that during a flood, the water goes into the basement of that building. So how deep the flood is depends on what is the grade, the level of the ground above sea level where you're standing, and then what is the height of the base flood itself. So for example, let's say that that building didn't have a basement and the first floor was at 8 feet above sea level. So what this tells me then in an AE 10 zone is there would be 2 feet of water on the grade, on the ground where that building is during the 100-year flood or the 1% chance flood. Does that make sense? So you take that base flood elevation, and then you look at the elevation of the ground you're standing on, and that's how you'll know the depth of the 1% chance flood. Obviously, more powerful floods, more intense floods, it will be deeper. But that's what those mean. Those are the base flood elevations. And by the way, those are the base flood elevations rounded off. If you were going to build something in the floodplain or had to do some engineering, you would be getting the base flood elevation from the engineer in 1/100th of a point. So it'd be like, maybe it's 11.02, or maybe it's 10.89 or something like that. So those are the modeled estimates that FEMA puts on the map for the base flood. Hopefully, Peter, that answered your question. All right, so let's see what else. So anything again in the blue area, if there's a mortgage involved in the transaction, would require a flood insurance policy. And just for a note, it doesn't mean that it requires an NFIP policy, but that's up to the lender. A lender can say, nope, I'm not taking anything but an NFIP policy. Or they can say, well, show me your private policy and I'll tell you if it's good enough for me. Every lender is a little bit different. Also, so you know, those buildings that are right near the blue area on the map, the lender could say, I'm not taking the risk. I want a policy. It's up to the lender. So sometimes people start out with one lender and end up with another because they don't like what the lender says. But every lender for any structure that's touching or in the blue area, the federal law requires them to have a flood insurance policy. So it's a federal requirement. Let me see what else. All right, let's go to the next slide. So yes, these are the elevation certificates. If I were in a room with you, I would say, raise your hand if you've ever seen one of these. I think probably many of you have. We do get, again, every week, practically every day, someone is emailing or calling us wanting to know how they can get the elevation certificate for their building. So let me just tell you a little bit about elevation certificates. Let me look at the time. We have time. So an elevation certificate is completed by an engineer or surveyor surveyors are licensed to fill these out. Some engineers and some architects are also licensed to fill these out. In any case, these are filled out either by request of the property owner, who can pay, $800 to $1,200 for these elevation certificates. On the islands, it might be a little more than that. You all tend to have things become a little more costly than the rest of the state. But roughly around $1,200, I think, is the going fee for one of these. So an owner could, just because they want to have it, they could pay $1,200 and have one of these filled out for their property. They don't have to have a reason. However, some communities, especially on the Cape, you have communities that are participating in the NFIP at a higher standard. You may have heard the term community rating system or CRS community. So a CRS community is required to have one of these as a part of the permitting process for new buildings. So in a CRS community on the Cape, you would be more likely to find elevation certificates in the building inspector's file for a structure, especially if that structure was built or substantially improved after the date that the community joined the NFIP. And if you want to know those things, I can tell you those things later. I think at the end, well, Jennifer can probably share my my email address with you all. And if you want to know some of that information for your community, I'm happy to tell you that. So on the elevation certificate, and I only show you here section C, it's about a 6-page certificate plus photographs. So on this section, section C, this is the building elevation information. And Peter had asked about the elevation numbers shown on the map. You can see here now on another section, Peter, of this elevation certificate, it would tell you which map panel, which map date, and what the elevation is on that map. Again, as I mentioned, it might be slightly different in reality. But so for this one, I think I made myself some notes about what this actually is. Yeah, so this elevation certificate is for a building, as you see in the top right corner, that's been finished. It's a new construction. It was finished. And so after it was finished, it was re-surveyed, and here are the final numbers. This building is in the V zone. So the foundation required for V zones is pilings or columns, not a slab, not a stem wall. And so what this shows in letter A, their top of bottom floor is 20.46. Well, that's nice to know, but number C is what you really need in a V zone. The bottom of the lowest horizontal structural member, 19.03 feet. So if it was built in compliance, that means that the base flood elevation must have been 17 at least, because you have to add 2 feet on top of that for the bottom of the lowest horizontal structural member. And by the way, I don't know if any of you are familiar with all that, what freeboard is, but the 10th edition of the Massachusetts Building Code goes into full effect. It's in effect now with the 9th edition, so people have a choice right now. But by July 1, it will be 10th edition only, and the V zone will have to be structure in the V zone will have to be 3 feet higher than the base flood elevation. So the bottom of the lowest horizontal structural member in the V zone will have to be 3 feet higher than the base flood. So again, in this case, the base flood was probably 17. And the new building after July 1 will have to be 20 feet above, 20 feet. So I guess to tell you, the reason I show you the elevation certificate at all is because if I were a buyer of something in the floodplain, which I would never be, but if I was, I would want an elevation certificate for that structure. I would want the person to either give me the elevation certificate that they have, or I would want them to buy one before I would buy the structure, because I want to know these details. I want to know, how high is it above the base flood? What else do I need to know about the building? For example, another part of the elevation certificate, it shows openings, flood openings. So if you're not in the V zone, so plenty of areas on the Cape and Islands are in the A zone, which is not, the V zone is where all the waves come up and the waves bang against things. It's the most dangerous part of the flood zone. A zones don't have wave action. Some of them do, but in general, A zones don't have wave actions. And so in that case, you can build a house on a stem wall or a crawl space, or, you know, that kind of a foundation that's not a basement. But you could have little openings underneath the first floor that let the water flow through and out so that your structure doesn't get damaged. And now I think I'm just getting into too much things that you probably don't care that much about, but let's make sure I'm not missing anything. By the way, if you are looking at someone's home and it has a basement, the bottom of the basement is considered the top of the lowest floor for the NFIP policy. So I can tell you that if someone does have to have an NFIP policy for that home and there's a basement, they're going to pay a lot of money, a lot of money. The most that someone will pay now in the NFIP is for an annual premium is $12,125. It used to be much higher than that, $40,000, $50,000, $60,000. But they capped it a few years ago and said, we're not going to ask anybody for more than $12,125. So for a residence, that would cover the building for up to $250,000 in damage, and it would cover the contents for up to $100,000 in damage. Nowadays, people can purchase varying amounts of those. They didn't used to be able to, but now they can. They can negotiate the deductible, they can negotiate how much contents coverage and how much building coverage they want. And the lender will make sure that the building coverage is at least the amount that is owed to the lender. So let's say someone has a mortgage for, $500,000, then the lender is going to want that NFIP policy for $250,000, and they're going to want another policy on top of that to cover. By law, I think they only have to have the NFIP policy, but most lenders will probably want enough coverage for the whole building. It depends. It depends on the building and the lender. So let's see. Let's go to
Joy. A question came in from, I think, the previous slide.
Okay. Oh, insurance only if building in the blue. Is that the question?
Yes, that's the one I was referring to. Yeah.
Okay, that's a good question, Lynn. So I'm going to tell you the law. The law is that if a structure touches or is located partially or wholly in that blue that you're talking about, in other words, the special flood hazard area, then the lender is required by law to require a flood insurance policy for that structure. Again, the lender can accept a policy that's not an NFIP policy, but most lenders want the NFIP policy. It's the most comprehensive, unless you're going to pay a whole lot for a private policy. And also, if a lender accepts a private policy, they have to prove to the federal government that it's as good as or better than the NFIP policy. And a lot of lenders don't want to be bothered with all that. So they have to require, yes. So only if the building is touching or in partially or whole in the quote unquote, the blue. Now, a lender can require, though, a policy, a flood policy, even if the building's not in the blue, if the lender wants to. That's up to the lender. They're looking at their risk, and that's what they're going to look at. Did I answer that well enough for you, Lynn? Okay. Let's see.
She said yes.
Okay, great, great. So we get a lot of calls, as I mentioned earlier. Let me see, it's 1:39. Okay. About homeowners, sellers, buyers will call us and say, I want the elevation certificate for my house. Do you have it? We don't keep that at the state. Some states do keep them, but we don't in Massachusetts. So where they have to go is they have to, if they are the property owner and they're asking for this, then obviously they know that they don't have one. If they're a buyer, they might think that the property owner has one. They have to ask the property owner. They can ask through you to see if the property owner has an elevation certificate, an existing elevation certificate. Also, a buyer could check with the local building department or the local conservation commission. If there is an elevation certificate for that property, it might be in their files because of permitting processes. It might not. And also they can check the current or previous flood insurance agent, because FEMA used to have a law that said if you're going to buy a new flood insurance policy, you have to give us an elevation certificate. So sometimes a current or previous insurance agent will have one of those in their file for that property. If none of those prove to discover an existing elevation certificate, the likelihood is there isn't one, and someone would have to purchase one. So that's what we'd help people to find if they have it. If you're in a CRS community, as I mentioned before, and the building was built after the community joined the CRS, then there will be an elevation certificate in the local building department's file. All right. Let's see if I missed anything. There are only 22 communities in Massachusetts that are in the CRS program out of 351 communities. And 9 of them are on the Cape. So you all have a really good record for having CRS communities down there on the Cape. Another thing you might run into in your transactions is someone might say, well, I've got a LOMA. So this person buying my house doesn't have to worry about flood insurance. And a letter of map amendment, that we call them LOMAs, a letter of map amendment may or may not help the buyer to get out of the mandatory flood insurance purchase. It depends how old the LOMA is. It depends if the maps have been changed since that LOMA was issued. It depends on a number of things. So if someone has a letter of map amendment, say a seller has that, then you all can, it can be checked whether or not that is still in place. And you can check it on the FEMA Map Service Center, but it's not something you could easily figure out. So if someone says they have a LOMA and you want to know if that LOMA is still valid, you can certainly contact our office, send us a copy by email of the LOMA, and then we can tell you whether it's still valid or not. Oh, I see a question. Oh, I see a few questions. Maybe I should stop.
It came in just as you were saying how they could go about getting one, but maybe it's worth repeating.
Yeah, let me get to Peter's question here. How does insurance company determine the rate if not an elevation certificate? And then trying to understand if getting a certificate can reduce a premium. 2 really good questions. The reason FEMA doesn't require the elevation certificate anymore is because they changed how they rate structures. In 2021, they changed that. And so how they rate them now is a catastrophic modeling concept. And so they will look at all the houses in a certain area and they'll say, oh, those houses, the way they build those houses in that area is like this. And so most of them are probably this high. It's really holly golly, I guess. I mean, and so your second question is important because if someone has to have flood insurance, yes, getting an elevation certificate, or at least filling out the homeowner part of the elevation certificate, has a very likely chance of reducing their premium somewhat, their annual flood insurance premium. Not always, but it can. And I would definitely, as a homeowner, at least try the homeowner section of the elevation. There's one part of the elevation certificate, I think it's section H, where the homeowner can fill it out and say, hey, you know what, my lowest floor is about 3 feet above the highest grade next to my building, and submit it to their insurance agent. They can always ping FEMA and see if that would change the premium. Sometimes it does, sometimes it doesn't. And even if it doesn't, or even if it would make the premium worse, FEMA says that they don't do that. They won't make someone's premium worse by the information on an elevation certificate. That's what they say. So I haven't heard anybody say anything to the contrary of that. And then now to Thiago's question, how would one get a LOMA? So a homeowner, a property owner can file for a LOMA for free online. It's a FEMA process. It doesn't cost the owner anything. But the data that the owner has to submit with the request, that does cost them something. Generally, it is an elevation certificate they have to have, and they submit it to FEMA. And the elevation certificate, now see, in the case of this one that I'm showing you, if you look right in the middle, that box that has the bold border on it, it says outcome, what is removed from the special flood hazard area? And the word is the structure is removed. So that doesn't mean that the whole property, the ground and the yard and the detached garage, doesn't mean those are all out, but it means the structure is out. And if you look to the right of that, you'll see why. So they're in the X zone, the flood zone X, which does not have a base flood elevation because the base flood is not supposed to reach the X zone when it happens. Somehow, an engineer determined that the 1% chance base flood elevation is 6.8 feet. And it shows that the highest adjacent or the lowest adjacent grade on their property is 9.4 feet. So if the base flood happened, it would flood their property up to 6.8 feet above mean sea level, but their lowest part of their property is 9.4 feet, so the base flood would never reach them. And so in that case, this structure would not be required to have insurance. However, the owner can't just go to the bank and give them the LOMA. The owner gets the LOMA, and then the owner informs the lender that they have a LOMA. They can show it to them. And then I guess the lender's third-party determination company gets the affirmation from FEMA. Yes, that's a FEMA LOMA. We gave it to them. So basically, if you get a LOMA, you might be able to get out of the mandatory purchase requirement. But it does say at the bottom of this piece of the LOMA, it says portions remain in the special flood hazard area. So that means there are some parts of the property away from the house that are in the floodplain. Would I get a flood insurance policy if I was this person? Yes, I would, because I'm risk averse. I don't want flooding. I don't want to deal with flooding. That's why I wouldn't buy something in the floodplain. I'll go on vacation in the floodplain, but I'm not going to buy anything. All right. So if
Joy,
the
really
seller has,
quick, can I
yeah,
just interrupt real quick? So,
yeah.
our VP of MLS is actually on the call, and she wanted me to remind everyone, at least for, this may not mean anything to you per se, but for our members that are on, is that we have a product called My Flood Status, which is integrated right into the MLS, and that helps agents get access to flood zone determination reports. So if you're not familiar with what that is, reach out to us post webinar, and we can point you in the right direction.
Thank you. And that's really good to hear, because I know that you used to have that, and then I thought that it was taken away. So I'm very glad to know that that's still there in your MLS on the Cape. All right, so let's move on, because I just realized we have like 15 minutes. All right, so this is another important document when someone's buying or selling in the floodplain. If I were a buyer, I would want to see the declaration page for the owner's flood insurance policy if they have one. Because on the declaration page, it shows what the annual premium is for that person. It also shows some other interesting information. Are they getting discounts? Are they getting any remaining statutory subsidies? So it shows all of that. And I just want to use this opportunity to say, let me see, I don't think I go into this in another slide, but you have to be kind of careful. If someone has a flood insurance policy and a buyer is going to have it, you want to make sure that they transfer the current owner's policy to the buyer. And that is because the likelihood that the current owner is on a glide path to a higher annual premium is very high. Most people are in the country right now, because of the changes that took place in 2021, are on an 8 to 10 year glide path. And so that means their policy goes up a little bit every year. And if the policy is transferred to the new owner, then they will catch them right there in that glide path, and they can get that rate that this current person is paying. If they don't transfer the policy, then the new owner goes out and just buys a policy. They're going to pay 100% the actuarial rate of the flood risk, and it will be higher than what the current owner is paying. And another thing is, some owners get their policy through an insurance group that is special, like USAA, for example, can only be policies sold to veterans and active military. So if the buyer is not a veteran or active military, they can't transfer that policy. So you want to know about that too. If I was a buyer, I'd want to know, what is their policy? What are they paying? Can I transfer it, etc. And that's all I'm going to say about that, because, and one other thing I see there, the bullet, secondary home fees, just so you know, if the person selling the house that's their primary residence, but the person buying, it's going to be their secondary residence. They also are going to pay a lot more. People pay much higher premiums for secondary residences than primary residences. All right. And then the seller could do some mitigation that would make their flood risk a little less, or the buyer could do this once they buy the house. You can see flood openings there. You can see an elevated air conditioning unit. Another thing that people do is they abandon a basement. So if they have a pre-firm house with a basement in the floodplain and the basement floods and the groundwater rises and seeps in the basement, blah, 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 they can abandon that basement, and officially then their lowest floor would be the top of the first floor you walk into. That would also help their flood insurance premium. I don't want to get into that too much because we don't have enough time. So these are documents that are used by the lenders to determine how much, whether or not you're going to have to pay flood insurance, not how much, but whether or not you're going to have to pay it. So again, they pay a third-party determination company who gives them that first item. They can look at a FEMA permit, but it's not really going to change their mind unless the third-party determination company changes their mind. An elevation certificate is helpful, and a letter of map amendment is helpful. In all of that, the lenders can look at those things. And we get into this a lot more in that 2-hour course that I teach. So what's left now to talk about flood risk is flood loss history, home inspection, and others. So let's go through that. This is a really important phone number. I think it still works. You never know these days in Washington with all the changes, but if a person is a policyholder of a federal NFIP policy, that person can call this phone number and they can request the loss history, the flood loss history for that structure. If they don't have an NFIP policy, they can't get this, obviously. And if they're not the policy holder, they cannot get this. So, for example, a buyer cannot get this if they don't own that property, they don't own the policy on that property, they can't get this. But the seller can get this. If the seller has an NFIP policy, they can get this. Okay, so that's just something else that a seller could provide to be transparent about any previous flood losses, even before they owned the property, because it goes all the way back to 1978. All right, and then obviously buyers should definitely have a home inspection. It's highly recommended for a structure in the floodplain. Home inspectors are pretty good. They can catch where something's been patched over or painted over or changed due to flood damages. And even if the owner had put everything back really well, still the home inspector could say, this home has previously been flooded. That's good information for a buyer to know. And a buyer can also talk with neighbors. I always recommend talk to more than one neighbor, because one neighbor might not like the seller and might tell bad stories, and another neighbor might be a relative of the seller and tell good stories. So, ask a few neighbors. And then also, I think, these are other sources of information about flooding in the community. The building department, permit office, community development, especially. Conservation Commission. The fire chief knows about flooding because people call for their fire trucks to come pump out their basements after a big flood. And Department of Public Works knows where it floods too. All these folks know where it floods in the community. So if I were a buyer, I would want to know that, especially in an urban area. Let's see. Also, for you as realtors, you can contact this, FEMA has a distribution center for materials that would help you and or help your buyer. So you can call that number or fax them. I don't know if faxes still work anymore, but you can also reach them through FEMA, floodsmart.gov, and you can ask them for any materials that realtors can use. They're free materials, and they'll send you, 25 or 50 brochures, whatever their limits are on those things. The one in the middle, questions and answers about flood insurance for real estate professionals, is a really good one. The others I think are more brochures, like a flyer. And then if you have any questions, or your buyer or your seller has any questions about a policy, so the buyer's policy, how the buyer can transfer a policy, or if the seller has questions about their policy, This gal, Patricia, she can answer those questions. Every FEMA region has one of these experts, and Patricia is the expert for our FEMA region here in New England. So you can give this information to your buyers or your sellers, or you can call her yourself if you have a question about flood insurance. This gal will know the answer. And then this is our website here. And then at the bottom, if you want to contact myself or any of my colleagues in the flood hazard management program, that link at the bottom gives all of our information. And we deal with flood insurance, flood mapping, flood mitigation, flood regulations, and obviously training. So I think I'm going to stop sharing if that's okay. And if Jennifer hasn't given you a PDF of these slides, I'll give her one to give you, and I hope that's helpful to you today. Are there any other questions?
I don't see any coming in, but just a couple reminders. I did get a question just now about reminding everyone what the name of the software that I mentioned. So there's two things. It's My Flood Status, which helps agents get access to flood zone determination reports in our MLS. And then we also have Cartofront, which is integrated for flood quotes. So those are two things you have access to right in the MLS in order to help your clients when it comes to the flood zone that we're talking about today.
Great. And I don't know if you know Shannon Hulst, but she is a floodplain coordinator for the Cape, and she's fabulous. So Jennifer, if you have her contact information, you want to send it out to people, Shannon is very, very helpful.
She's great.
Let's see. Someone's asking, can I provide the links to the website? Oh, yeah. In other words, put them in there. Sure. Hang on a second. I got to go down here. Oh, goodness. Let's see if I can get them off of here. All right. This is our website. And on that website, you'll find the link to the contacts, but I'll put that in too.
All right, we have a couple of minutes if
excellent.
there's any final questions that anyone has. You were so thorough. There was just no questions to be asked by anyone.
Touch the top, you know.
Yeah, I know. Definitely a very involved topic. So since no one else is coming in with any questions, thank you for that, Lita. I appreciate it. We will let everyone go. Thank you for your participation in the webinar today. Thank you, Joy, for lending us your experience and your insights. And we will send out the recording and your slides to everyone shortly. So her information, I'll include it so that way if you have questions, you know who to reach out to, and then definitely utilize the options in the MLS that was mentioned. If you have any additional questions, reach out to us and we can guide you in the right direction. And with
Thank you
that,
so much.
have a great afternoon, everyone. Nice to see you, and thank you for being here.
Bye-bye.
Bye, Joy.